We're jumping straight into SMX today. Everyone is watching the price action. But the real story is the massive $250 million capital commitment.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds of this fascinating situation, make sure you hit that subscribe button and smash the like. We are here to simplify the market for you, and you really don't want to miss what's next.
We have a really complex one today. I mean, it's got everything. High tech, huge money, and honestly, some terrifying financials.
We really do. We are unpacking SMX, or Security Matters. And I have to say, looking at the research, this feels less like a stock and more like a high-stakes venture capital bet that just happens to be public.
That is the perfect way to frame it. I mean, usually we're digging into PE ratios, steady growth. This is different.
This is a binary outcome play, all or nothing.
Completely.
The headline number that just stopped me in my tracks was at $250 million.
It's a staggering number.
But it's not just the number, it's the timing. This company has been so volatile. I mean, the chart looks like a roller coaster. It's been down, it's been split, it's been battered, and then boom, February 6, 2026, this news drops. So let's start there. What does this actually mean for their survival? Because things looked pretty grim before this.
Well, what's fascinating here is that this isn't just a cash injection. It is a lifeline.
A lifeline.
In the world of these, deep tech companies, cash is oxygen. And SMX was, well, to put it bluntly, they were running on fumes.
Right.
This commitment extends their runway all the way through 2028.
2 full years. In the tech world, that's basically a lifetime.
It is. It buys them the most valuable asset there is.
Yes.
It means management isn't just trying to make payroll next month.
They can actually focus on the mission.
Right. It shifts the entire mindset from survival mode to execution mode.
But let's clarify something, because capital commitment can sound a bit like free money. This isn't a lottery ticket, is it?
No, not at all. It's an equity line. Think of it like a very, very large credit limit they can draw down on.
And they pay for it with shares.
Precisely. But the signal it sends to the market is huge. It says, we are not going bankrupt tomorrow. It removes that immediate insolvency risk.
It puts a floor under the disaster scenario, at least for a while.
For the near term, yes.
Okay, so the lights stay on, which leads us to the what? You have to have something to sell. And this is where it gets really interesting. SMX isn't just another QR code company.
No, this is.
Yeah.
It feels very sci-fi. This is the core of their bull case. SMX has developed a proprietary physical and chemical marker system.
Chemical markers. Unpack that for me. Is this like invisible ink?
Kind of, but way more advanced. Think of it as a hidden fingerprint. Or even better, like DNA for inanimate objects.
DNA for objects. I like that.
They can take this marker, this specific chemical compound, and embed it into solids, liquids, even gases.
So if I'm a manufacturer, I can put this into a vat of oil or the plastic for a luxury handbag.
Exactly that. Or a microchip or fertilizer.
Yeah.
And once it's in there, it's permanently marked. It becomes part of the molecular structure.
Wow.
But here's the kicker. It's not just a stain. That marker is linked directly to a blockchain.
Ah, the digital twin concept.
Right. So you have the physical object, the liquid or solid, and it has a digital twin on the blockchain that can't be altered. You scan the physical item, it detects the chemical signature.
And the blockchain confirms, yes, this specific pile of plastic came from factory A on this date.
That's the aha moment, because it solves the Oracle problem.
Yeah.
How do you trust the data going onto the blockchain?
Garbage in, garbage out.
Exactly. But here, they are anchoring the physical world to the digital one chemically. You can't fake the chemistry.
Which is huge for anti-counterfeiting. You can fake a label, you can copy a QR code, but you can't fake the molecule.
And from an investment standpoint, this creates what we love to call a moat.
A big one, because of the switching costs.
Tell me more.
Well, think about it. If I'm a factory manager and I retool my entire production line to inject this chemical into my paint, am I going to switch to a competitor next month?
No way. It's too hard.
It's not like switching software. This is physical integration. Once SMX is in, they are in. It's sticky.
That's a very sharp point.
Yeah.
If they can get a customer to sign on, that customer is likely to stay for a very, very long time. It becomes part of the product's recipe.
So the bull case, a company left for dead gets $250 million, sitting on tech that seems almost unfakeable.
And because the stock has been beaten down so much, you're looking at what we call a zero-base situation.
Explain that for listeners who might be new to the term.
Well, when you're starting from the bottom, the only direction is up, if it works. If they can commercialize this, the returns could be, well, they could be multi-baggers. The upside is mathematically huge.
It's the lottery ticket scenario. Massive potential payoff. But, and there's always a but on this show,
There's always a but.
we have to look at the ugly stuff. And folks, the ugly stuff here is genuinely ugly.
Let's break that down even further. Because when you peel back the curtain on the financials, the picture is, well, it's stark.
Stark is a polite way of putting it. Let's talk revenue. The lifeblood of any business. What did SMX report for the fiscal year?
Zero.
Zero. As in nothing. Not even like a consulting fee.
Zero? Not a little bit, none.
Okay, that is wild. A publicly traded company with $0 in revenue. How is that even possible?
It's rare, but it highlights just how early stage this is. Think of it like a biotech company before FDA approval. All R&D, no sales.
Right.
But while the revenue is zero, the spending was definitely not zero.
Oh, I saw these numbers. The burn rate is a bonfire.
Net income was negative $31.09 million.
31 million. Gone.
And if you look at the earnings per share, the EPS, it was a negative $7,765.
Hold on. Wait. Negative $7,000 EPS? That sounds like a typo.
It's not a typo. It's driven by the massive R&D costs and the share structure. Building something this new is incredibly expensive.
But with no money coming in, that cash burn is just terrifying for a traditional investor.
It's like building a Ferrari in your garage, spending millions on parts, but you haven't sold a single ticket to let people see it yet.
And the company knows this, right? They're trying to stop the bleeding.
They are. They've gone on a serious corporate diet. The employee count is down to just 33 people.
33.
That's it. That's a 54% drop year over year. They cut the staff by more than half.
See, this cuts both ways for me. On one hand, good. Discipline, survival. But on the other hand, 33 people.
Right.
To run a global, complex chemical tech company, do they have enough hands on deck to actually grow?
That is the critical question. Can 33 people effectively deploy a $250 million commitment? It's a huge question mark.
It's a skeleton crew. And we have to talk about the stock itself, the reverse split.
Right. On February 12th, a 1-for-4.888 reverse split.
I always feel like these are such a bad sign. Why do companies do this?
Usually it's about compliance.
Yeah.
To keep the stock price above $1 so they don't get delisted from the exchange.
It's financial engineering.
It is.
Well,
it doesn't change the company's value, but it artificially raises the share price.
yeah.
It's like cutting a pizza into fewer, bigger slices.
Yeah.
You don't get more pizza.
And the market usually hates it, right?
Typically, yes.
Yeah.
It signals distress. And we saw that. The weekly decline was over 54%.
Oof.
The monthly decline over 67%. It shakes out investor confidence.
And that leads to the volatility. The stock has a beta of 3.18.
Which means it is a wild ride.
Break that down for someone who doesn't track the Greeks.
Sure. A beta of 1 means you move with the market. A beta of over 3 means this stock is more than 3 times as volatile.
So when the market sneezes, SMX catches pneumonia.
Or when the market jumps, SMX tries to fly to the moon. It moves fast and hard both ways. This is a high-risk asset.
Okay, so we have the layout. Bull case. Amazing tech, tons of cash. Bear case. Zero revenue, massive losses, tiny team. So what are we watching for? What are the signposts?
The next 30 to 90 days are critical. This year, 2026, is the make or break year.
I'm looking for that Q1 filing.
Exactly. The Q1 2026 6K or 10Q. And the mission for anyone listening is simple. Find the first dollar.
The first dollar, that's it.
We need to see revenue.
Yeah.
That $250 million needs to translate into actual sales. Even a tiny amount, $50,000, would be a massive signal.
It's the difference between a science project and a real business.
100%. If that filing shows up and the revenue line is still zero, that is a red flag the size of a football field.
That would be very concerning.
And beyond the filings, you need to watch the industry news. Look for announcements from anti-counterfeit conferences.
Why there?
Because that's where the deals get made. They're selling to industrial giants. If SMX announces a partnership with a plastics manufacturer or a luxury brand, that's proof of life.
That's the commercialization we need to see.
Right. And keep an eye on news about that capital raise itself. Are they actually getting the money in the bank?
And there's a bigger picture here, too. The macro trend.
Yes, the circular economy.
The idea that we need to reuse and recycle everything.
Precisely. But the problem with recycling is traceability. How do you prove what's in that melted down plastic bottle?
And regulations are catching up to this, aren't they?
They're getting tighter and tighter. The EU, the US, They want digital product passports. They want to hold manufacturers accountable.
And SMX's tech fits right into that. If you can chemically mark a plastic bottle, you can track it through the entire recycling process.
That's the claim. The marker survives the process. So you can test the new recycled plastic and say, yes, this contains 30% recycled material from this specific source.
That's valuable. So as regulations tighten, the demand for their tech should increase. It creates a tailwind.
It does. It's a bet on the future of how we handle physical goods.
All right, let's wrap this up with the lowdown.
It's a complex story.
It is. So here's the summary. SMX is the definition of a high-risk, high-reward play. On one side, you have a company that just got a $250 million safety net. They have cash until 2028, and they have a technology that could fundamentally change how we fight counterfeiting. That's the bull.
But the bear is growling loudly. You have to stomach zero revenue, a net loss of over $30 million, a skeleton crew of 33 people, and you have to accept extreme volatility.
It is not for the faint of heart. But here's a final thought I want to leave you with. We live in a world of deepfakes. AI can fake a voice, a video. Digital is becoming untrustworthy.
That's a very real concern. We see it every day.
So in a world where everything digital can be faked, is the only real proof left something physical, something chemical, something science says is 100% real?
It's a profound question.
If the answer is yes, then SMX is sitting on something incredibly powerful. If the future of truth is chemical, they win.
That's truth assurance as a service.
Truth assurance. I like that. That's the lowdown. Thanks for listening to the Easy Money Show.
We'll see you next time.